Hello guys, thank you for joining me on clicking on this video. Subscribe to see more of this kind of content. So, this channel, I want to base the channel on the strategy I'm learning, which is supply and demand. I've tested other strategies, but I noticed this actually works well on Euro USD. So, I tested some other pairs uh, like gold USD. I noticed that I don't get good risk to reward using 5 minutes, right? Using 5 minute time frame. So yeah, sometimes you get 1 to 3, but most times you get like maybe half or something like that. So that's why I just want to focus just on Euro USD. You can see on my watch list, I only have Euro USD and GBP USD. Also, I'm kind of looking at GBP USD, but for now, I'm not focusing on it, just Euro USD. Yeah. So yeah, this channel will, for now, will be based on supply and demand, 5 minute time frame, then Euro USD. So we could see on this. So what I do is I okay. These are some of the trades I took on my account. So, but I don't have like a live account I'm trading presently. So this is just uh, I trade. I had a profile, but I blew the account. So yeah, so I don't have an account presently. So these are just markup of what could be if you remove your emotion. Just take. Well, I'm focusing on you taking all the trades, like all the supply and demand trades you see on Euro USD. Okay, so yeah, that's what this is all about. So now, the first trade of the week, which is today's Monday, the first trade of the week would have been this. So marking up the zone to the last bearish candle before the bullish movement. This is it. Then I mark it to the end of the. You could see if I just focus on here, this is we would have been wicked out before the movement. So, but this is I have something like this. So yeah, so and then again what I do is I don't leave my put my stop loss at the end. I add like extra 2 pips. This is 9.3. So I add 2, which is like making it 11.3. So what I do instead is after adding this, then I remove 2.2 pips from the start to reduce the stop loss a little bit. So that's this 11.4. So let's say we remove 2, that's, let's say we're back to 9 also. So yeah, that's what I do on big zones like this. So if the stop loss is like 5, I leave it the way it is. 5, 6, so I leave it the way it is. But if it's very big, especially London section, I I try to find a way to remove it by don't you can't reduce the bottom here. You need to reduce from the top actually, because here it could just be wicked out and it will still go in your direction. So it's better you are tapped in late than you putting your stop loss at the immediate candle and you're tapped out and the trade moving your direction. So, and the risk to reward I target is like 1 to 3. So we could see this one went a long way, but this aftermath, you could have said, oh, why don't you target the big run? But you should know, if you're a day trader, these big runs does not happen every day. Yeah, you tend to get it. So what I do is I only target 1 to 3. Yeah, 1 to 3, and then move on with my day. So yeah, okay. Some people after taking this kind of win now they leave the chat, but what I'm doing is I want to focus majorly on taking all the setups that appear in a day and see if I can still appear positive. So we could see that this one gives us 1 to 3. Then this another one, we had the breakout structure, imbalance, mark the zone. Then we could see that it's cut right through. Okay. Some people could have said, okay, why not use risk confirmation entry for this? Maybe break of the candle high. We could see this one, break of the candle high would have moved my stop loss here, my entry point here, and then 1 to 3 will be a lot bigger. You can see. So making you to be targeting like 41 pips. This is not common every day for you to get. So yeah, so confirmation entry could have made this one win, then this one would have still lost even with the confirmation entry. You see, like maybe you use the break of the candle, then on entering you enter here and then add 2 pips. You could see it just moves a bit. But my aggressive entry, it will be here, then 2 pips below the last low, then yeah, loss. So whether I use confirmation entry, risk entry here, you still be tapped out here. So yeah, you still enter the trade and be tapped out. So that's for day one. So that means making this day +3 -1, making 2% for Monday. So all these ones are like internal structure for me. So I don't look at this if it did not break this low. So that's why I don't consider this a trade. And again, when it gets to this time, I don't usually look for much trades like that. So I usually look for trade in London, and then this is like a section indicator. This is a section indicator. You can check it out on TradingView. So then this is like London, New York overlap. So these are the times I trade mostly, but this time I don't take trades that much. So we can see on Tuesday the first trade, the first and second was a loss actually. So you can see I was tapped in, there was a reaction. I think this trade moved to like 1 to 1.48 risk to reward, but I don't do that. I go for like 1 to 3. So you can see it moves, then it came back, took me out, and then still go in my direction. Crazy, right? So yeah. So this one's like -1 from the 2 on Monday. That's -1. This was another loss. Also gave a reaction, then boom, took us out. With confirmation entry, you'd have still taken these 2 trades, and for this one, you wouldn't have even been a profit to have taken you out, assuming you're using break of this candle or break of this candle. You can see how the small movement you got before it still take you out. So the same thing for this. If you use confirmation, you'd have entered here, then boom. If you're targeting 1 to 3, or maybe if you're using 1 to 1, yeah, you could have scaled through. Maybe 1 to 1, it could have been good at 1 to 1. So, but yeah, I don't use 1 to 1. I use 1 to 3. I love the bigger risk to reward. So you can see this reaction, then boom, break. So this is like -2. The 2 we had on Monday, so this took it out, making 0 now. So, but this is another one, break of structure. Although there was no fair value gap here, it came in, then react. So and what I do to maximize my risk to reward, I notice on London New York overlap, I used to get pretty good movements. This like from backtest. I've been backtesting this strategy since like last year. Last year, like maybe since September, August or so. Yeah. So I have some screenshots. Maybe I'll show it to you guys later. So yeah, I noticed this one. I used to target 1 to 4 on this overlap here. If it's London, I target 1 to 3. But if it's the overlap, I notice there are a lot of more volatility in the market. Market tend to move a lot, so I target 1 to 4. So with the 0, this is like a 1 to 4 movement. So making us to reset from 0 plus 4, making it to be 4. That's plus 4%. So that's for Tuesday. For Wednesday, I marked this zone. Market did not come back. Even this zone also, it was legit, but market did not come back into it. Just a little for it to come back, but it did not. So then this day also, I note there was a break of structure, then the market came back. You can see break of structure, although there was no fair value gap here. But I noticed after a range like this, when you get a break of structure and the market comes back, it's usually work out also. So you can see this gave us 1 to 3 neatly. So yeah, target 1 to 3. You see the high, then add 2 pips. Yeah. So adding these 2 pips, you can see that it does not make sense for this trade, right? But this is after a lot of back testing that I've done. I noticed sometimes, a lot of times, market comes out take up the high before going down. So that's why I had this extra 2 pips. So the 4% we had the previous day plus this 3%, making it 7%. 7%. So also you can see market came back after this large drop, break of structure. Market came back to this other block here. Then I entered here. It gave me 1 to 2, then reversed on me. I would have been targeting 1 to 4. This is London New York overlap. So targeting 1 to 4, came to 1 to 2, then took me out. So this is -1. So the +3 and +4, uh, sorry, 3. Okay, we are in +6, right? Yeah, +6, +6. Okay, no, the previous one was 4, right? Yeah, 4. Then +3, that's 7%. 7% plus this 3, 7% -1. So making it 6%. So 6%. 6%, this was like the worst day. So I took this trade here. It took me out, took another one here, took me out. This is like my other block. That's the 6% now -2. Sorry, 6% -2, that's 4. Then I took this one. It almost took me out here in my entry, my risk entry. So it almost took me out. Imagine you're using confirmation entry for this. You'd have entered maybe on the break of this candle, then maybe 2 pips below here or so. That's if you give. So 2 pips, you can see you'd have been tapped out on this one here. But with my aggressive entry, I was almost tapped out here though. You could see that is why you had 2 pips below the zone. You can see. So then this one gave us the 1 to 3, 1 to 3. Then that's 6 - 2. That's 4. 4 plus 3. That's 7. Back to 7. So all these ones break of structure but did not come back. So yeah. So and I don't trade in this period. So yeah. So that's 6 - 2, 4, then 7. So 7% for Thursday. Then on Friday, 7%. This was the zone, did not come back. This was the zone, you can see, did not tap me in. So it moves up. Then on this market reaction, I removed my buy limits. You can see this was like a flush. So, and I told you I don't trade internal structure. It's like internal structure. You could have maybe looked at break of structure, come back. This would have been a loss though. But I don't trade internal structure. So I consider this as like a single leg until it breaks here. If I can look at what's the other block that broke it and then mark it up. So yeah, that is it for the week. So close with 7%. So I'll be doing this every week. So if you are learning out, if you are just starting to learn Forex, you could join this channel. Then we'll mark up all the trades. When I get a good account, I'll take all these setups on my account. Yeah, although we know when you get an account like that, emotion setting, but I want to focus on stuff like this and then uh, yeah, see where it goes. So yeah, thank you guys for joining me. See you in the next one. Please like and subscribe to see more of this kind of content. Yeah, thank you guys.